Certainly the best.
Television. This is Talking Business. I'm Lawrence Osifo, and it's a great pleasure to have you join us on the program this afternoon. A lot to talk about, a lot to look into, a lot on the scene of the economy that is troubling, sort of, but we're here to make sense out of some of them as far as we can. Well, we've heard now that the Senate is inviting the immediate past Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, the NNPCL, the person of Mele Kulukiari, to account for the sum of 210 trillion naira that seem to be unaudited for from the year 2017 to 2023, while he was there as the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited. It brings to bear, or it brings to question about the state of accountability in Nigeria when it comes to finances and money spent. You know, if you make calculation of 210 trillion naira, that will give you a national budget for more than, if I'm not wrong, for more than 4 or 5 years, as the case may be, if we're projecting 52 trillion, or rather 54 trillion naira just for the year 2026. So it means that budget is going to be, it will run for years, but one person seemed to have sat on it unaudited for as his tenure as the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited. Not really too good to talk about. Not really too good to talk about. But we'll look at what the Senate is going to do in the course of the investigation and the audit of that report to see whether there were discrepancies in terms of that sum. 210 trillion naira is a very, very huge sum of money that can fix Nigeria totally for good. All right, we'll begin by telling you that South Korea is to take a stake in oil deal with the United Arab Emirates, the UAE. South Korea has struck a deal on Friday, 6th of March 2026 to ship around 4 million barrels of crude oil to the United Arab Emirates, the UAE, bolstering supplies as the US-Israel war in Iran tense energy market. Iran claims it is now in control of the crucial Strait of Hormuz, the Gulf checkpoint through which a fifth of the world's crude oil flows through. Heavily reliant on oil shipped through the strait, South Korea said it has dispatched tankers to secure as alternative supplies of fuel. It will plan immediate berth two South Korean flagged oil tankers, each with a capacity of 2 million barrels, at alternative ports within the UAE that do not require passage through the Strait of Hormuz. The presidential chief of staff, Kang Hong, stated. Seoul also secured a pledge that up to 2 million barrels from the jointly held strategic reserves that the UAE stores in South Korea can be made available at the time upon request. The Kang stated. South Korea is the fourth largest importer of crude oil in the world, according to a U.S. government figure. About 70% of the crude oil of South Korea import passes through the Strait of Hormuz, according to government sources. Away from that, there have been some chaos in Nigeria's aviation sector as some international airports like the Murtala International Airport in Lagos and the Nnamdi Azikiwe International Airport in Abuja and some other domestic airports are grappling with the whole issue of a cashless policy that was introduced recently by the Federal Airport Authority of Nigeria, the FAAN. But it seems like that trouble is not ending anytime soon, or the stress that the people are passing through is not ending anytime soon. But let's hear from the Federal Airport Authority Authority of Nigeria, the FAN. Now, the Federal Airport Authority of Nigeria, FAN, has said that it insisted of a cashless payment policy at the Nigerian airports and will remain in place. The confusion and complaints that trade the recent rollout. Speaking to journalists on Thursday at the airport, the managing director of FAN, Olubunmi Kuku, stated that the directive remains a key government policy but assured passengers that the steps are being taken to improve its implementation following concerns raised by travelers and airport users. She explained that the decision followed the guidelines from which the Minister of Aviation and Aerospace Development, Festus Keyamo, after deliberations at the Federal Executive Council meeting FEC. Recall that the media report stated that the controversial cashless policy which led to the chaos at the airport, particularly at the aerodrome gate, was reportedly suspended on Wednesday, 4th of March 2026. According to Olubunmi Kuku, the council did not order the suspension of the policy but directed that the process be improved to make it more efficient for airport users. You heard the minister yesterday. She stated, following the Federal Executive Council meeting where Mr. President has asked us to necessarily to suspend but not to make sure that the process itself is improved before it gets rolled out. Olubunmi Kuku stated. The authority also described the directives as a major boost for both the agency and the aviation ministry, stressing that the policy was not a sudden decision but one that has been in the works for several months. FAN further explained that preparation for the policy began last year with extensive awareness campaigns aimed at educating airport users about the transition from cash to electronics payment. The FAM boss stated that he considered this to be a major win for the federal airports and also the Federal Airport Authority of Nigeria, as well as the Ministry of Aviation. The authority said that implementation followed the directive of the federal government improved at the Federal Executive Council FEC meeting, adding that the agency had earlier proposed a gradual approach. According to FAN, the agency had initially suggested a hybrid arrangement that would allow both electronics and cash payment to run simultaneously during the transition period. We had actually asked for a hybrid approach as well as for us to do both cashless and automated system. While reaffirming the commitment of the policy, the Federal Airport Authority of Nigeria, FAN, expressed appreciation to President Bola Tinubu for what he described as the pragmatic approach to governance and democracy in Nigeria, the FAN boss stated. There's been some of the chaos about this cashless policy with the Federal Airport Authority of Nigeria, FAN, and major airports. I saw one, should I call it a skit, sort of? Probably it wasn't, the Murtala Mohammed International Airport in Lagos, where a foreign national who came into Nigeria was actually held at the gate of traffic to the airport. So the guy had to board the bike, and the bike told him from the point of carriage to the airport, that is where he's going to drop him in the airport, he has to pay 5,000 naira. So I saw this guy, he jumped down from the bike, and he was actually trekking down, because to him he saw the distance as not too far, because this is actually causing a big issue in terms of car drops into airports, not just federal airports alone, or rather not just international airports alone, also domestic airports are also involved, or they are also part of this whole idea of the cashless, seamless cashless policy by the Federal Airport Authority of Nigeria in terms of how they collect their tolls, how they make their remittances and payment to the authority, which used to be cash-based before now. But one thing about some of these things, when we try to do it, it looks very, very tasking. Probably, maybe it was not test run for them to see some of the lapses that has been there before, but at the point of implementation, it becomes a very big problem, and that is the challenges some of the airports are facing right now. But in days to come, we look forward to see how some of the implementation of this policy gradually will continue to take shape and take it find its place in the system. Let's take a break. When we return from the break, we'll delve into exchange rates between the naira and the pound, and we also look at the pension scheme, what is happening to our pension scheme in Nigeria. And after the break, I'll have more update for you. Stay with us.
Independent television is 20.
ITV, certainly the best.
Ladies and gentlemen, what we are seeing on the stage is the Goro Cultural Princess Tonight. On the other side, we have the Gymnastic Boys. Gymnastic Boys, you don't know what we want to do now. We are bringing upstairs. We are at the first floor. We don't know what we are going to do in the second floor. This is the Goro Cultural Always.
Thank you so much for staying with us on the show this afternoon. Let's walk through the exchange rate market and see what's happening. As at this afternoon, on the official market and the parallel market, talking about the exchange rate between the pound and the naira. The British pound has maintained a steady, slow and slightly elevated position against the naira as the first full week trading in the month of March 2026 comes to a close. Real-time data from the Nigerian Foreign Exchange Market, NAFEM, and the informal trading channels on Friday, March 6th, 2026 shows that the naira navigated a period of relative stability supported by Nigeria's strongest external buffers in over a decade. In the official NAFEM window, the naira opened opened against the pound at 1,850 naira 30 kobo to the pound sterling. Throughout the early morning sessions, the exchange rate experienced a minor volatility, peaking at 1,852 naira 32 kobo before settling back towards 1,850 naira 29 kobo. This current level reflects a high degree of transparency in the willing buyer and willing seller model. While the naira has seen a marginal week-on-week softening against the pound, market liquidity remains robust. Authorized dealer notes that the Apex Bank, the Central Bank of Nigeria, continues to prioritize the clearing of valid foreign exchange requirements and requests, which has effectively anchored the official rate and prevented the chaotic swing seen in previous years. At the parallel market, which continues to show that the official windows closely with the pound sterling being exchange rate between 1,865 naira to 1,879 naira to the pound. The spread between the official and the black market remains impressively narrow, currently estimated approximately 1.2% and 1.5%. Traders in major financial hubs like in Lagos, Abuja, and Kano reports that while there is a steady end-of-week demand for personal travel and academic remittances, there is little evidence of speculative panic. The alignment between the two markets is largely attributed to the improved supply to Bureau de Change BDC operators, which has successfully decentralized access to foreign currency for small-scale users. The exchange rate trajectory this Friday is being shaped by several major fundamental factors. One of them is the 13-year high in reserves. Nigeria's gross external reserves reached a milestone of $50.45 billion this week. This provides nearly 10 months of import cover, given the CBN's substantial firepower to defend the currency and manage any sudden liquidity shocks. Sustained disinflation, headline inflation showed for the 10th consecutive month, falling to 5.10% in the most recent report. The cooling of the price growth, particularly in the food sector, has also bolstered the real value of Nigeria and of the naira and improved investors' sentiment. Trade and refining has also increased domestic refining capacity, which has significantly reduced the demand for foreign exchange for fuel imports and primary driver of historic naira volatility. And let's talk about pension and pension funds for those who are contributors to pension funds. So if you contribute to pension funds, you got to hear this. As the funds hit 28 trillion naira, as contribution exceeded 11 million naira. The Nigerian pension fund industry started the 2026 year on a high note. The total pension fund assets surging to a milestone of 28.04 trillion naira as at the 31st of January 2026, indicating that 22.64% of appreciation in pension assets from 22.86 trillion naira in January 2025. According to the latest unupdated report on the pension fund industry portfolio, the industry recorded a significant monthly growth of 580.22 billion naira, rising from previous net assets value at 27.46 trillion naira at the end of the prior period. On an annual basis, the increase represents an additional 5.17 trillion naira within 1 year, highlighting continued expansion in pension industry driven by contributions and also investment performance in the pension fund. This growth coincides with a steady expansion in the contributor base, with registered savings account membership reaching 11,084,127 naira as at January 2026. All investment landscapes remains heavily weighted towards the federal government securities, which account for 16.69 trillion naira of the total portfolio. Within this asset class, the federal government bond held to maturity are the single largest investment vehicle, totaling 13.16 trillion naira. Other FGN investments include treasury bills, 894.09 billion naira, Sukuk bonds totaling over 100.18 billion naira, green bonds standing at 18.30 billion naira. The industry also maintained a strong presence in the capital market. Domestic ordinary shares accounted for 4.29 trillion naira in investment distributed across various funds types, notably foreign ordinary shares are exclusively held within closed pensions fund administrators, totaling 262.99 billion naira. Corporate debt securities also represent a significant portion of the asset, valued at 2.24 trillion naira. This includes 1.45 trillion naira in corporate bond and 64.42 billion naira specifically dedicated to corporate infrastructure and bonds. To maintain liquidity, the industry holds 2.75 trillion naira in money market instrument, with a very vast majority at 2.48 trillion naira, which is placed in fixed deposit and banks acceptances. Alternative asset classes continue to play a vital role in portfolio diversification. Infrastructure fund investments stood at 292.32 billion naira, while private equities at 241.85 billion naira, real estate 170.04 billion naira, and mutual funds received at 240.49 billion naira. Among the various funds and their structures are ROSA Fund 2, which remains the largest, commanding a net value of 11.86 trillion naira, followed by ROSA Fund 3 at 7.19 trillion naira. The Retiree Focus Fund 4 holds also 2.27 trillion naira, reflecting the industry's commitment to providing stable returns for those in their post-employment years. As at the end of January 2026, the industry maintained a healthy cash position with a cash and other assets valued at 450.44 billion naira. What a healthy growth for the pension industry and the pension fund. This is what we'll call it a wrap on the show this afternoon. God willing, we'll be back again next week to update you about what's happening, talking the economy, talking business on the show. On behalf of my team, we want to thank you for being a part. I'll see you again on the next one. I'm Lawrence Osifo. Bye for now.